Bio, Life, Mea, Me.
Okay.
Life, Me. My
Okay.
life.
Tell me a little about the stock, Dylan.
Sure. So we touched a little bit on it earlier. I was pretty excited about it. Because it hits the diabetes area, which is a good good for, a lot of people have diabetes. This is a and also the current standard of care in diabetes is pretty bad. I have a couple relatives that are on date that have or had diabetes. And the standard of care is a lot of room for improvement in that space. And there's a lot of people that need that treatment. So it would be awesome, amazing, and also financially rewarding for a company to do a really good improvement in the space. So Biomea is, instead of treating the symptoms of um, diabetes, is actually going to underlying cause, which is your pancreas I can't see my hands, revitalizing your pancreas, your pancreas cells to start producing more insulin, which is going to with so far, now they only have small trials, but so far what I've looked at is really promising. It mimics the natural way. I covered a little bit about this earlier, but now I've dug into the company pretty thoroughly, and I'm it's still, I would still say it's a bit of a coin flip in terms of you might have some um uh I don't think efficacy, because it mimics the natural efficacy of a pregnant woman's body, but there might be some, in larger trials, some sort of safety data that comes up. But I think it's probably about a 50-50 right now. And the main thing about it that's really good is it's got about 9 months of cash, and it is trading quite low right now. There's two major catalyst events this year, first half and then the later half of the year. And the stock is trading at and the company's valued at like 50 million or something like that. Pretty micro cap. So the market's basically saying that this thing has, like a 3% chance of succeeding. So all you really need to make money is have the market recalibrate with some good news, whatever, to more like a 10% or whatever, to do really well. You don't even need to hold for FDA approval to make money on this stock. You could literally just hold to the market prices it a little bit more. Like it happened with Aura, another company we talked about, doing eye cancer, where the stock was in the 4 to 5 range for a while, and they got a new CEO, they got some new news coming in, and bop, bam. Now the stock is in the 8 to 9 range. So, this stock was kind of sleepy, so I missed out on that. I didn't really see that coming. Kind of came out of nowhere. That would have been nice to make some money on that. But Aura was really quite underpriced by the market. So with that new CEO, now the market looks like it's pricing in a way more high probability of success and all that. There are, phase 3 trials really heading to the end. So Biomea is still in the phase 2 trial, sort of early sort of stage. So a little more risk there, but I feel like that you can get there's a lot of gain to be made in terms of the market repricing, in terms of an actual pretty decent probability of success. Even if the market just priced in like a 20% chance of success, then that you would have a huge move in that stock. And the analysts all say it's worth about $7 and stuff, and it's worth, right now it's about 150 right now. So I'm waiting for a little lower in the ones to really make a significant purchase. So yeah, do you want to just jump in now? I've been talking for a while.
Yeah. No problem. I don't know a ton about this stock. I own a little bit just on the spec buy, but not a ton. I think what's the stock trading at? It's about like $1.50 or $1.60, right? Roughly. I think.
Yeah, I think it closed at 156, 157, somewhere around there today.
Okay. You know my normal questions. It's always almost the same question with biotech. So I guess let's get into it. Uh, I think again, I'm going this by memory. Was this the same CEO who had experience with Gilead and now he's working for a smaller company? Is that it?
Yes, that
Yes.
was the
Okay.
company we talked about, the spacing on the temporary interim CEO's name, like Mark something or other, Australian guy, worked at Gilead for a long time, and now he's going to a smaller company. Yes. He
Yes,
was on
and
the
this
board
is
of
the same.
directors and the CEO. Yeah, anyways.
Yeah. Thomas Butler looks like I'm looking at.
It was the old CEO,
Oh,
yes.
Thomas Butler stepped down, and then the
Left
new
last
one
year.
is Michael Hitchcock.
Yes,
Michael
exactly.
Hitchcock. My
Australian
apologies.
guy.
Butler is only stepped down a couple months ago, March 2025, and then Hitchcock
You
was the
mean
one who
1 year
came
ago,
in.
right?
Sorry, I'm sorry. Go ahead. I interrupted. Go ahead, Dylan.
March 2025. That's 1 year ago,
Oh, one
not a
year
couple
ago.
months ago.
Yeah, my
Yeah, yeah.
1 year ago. Yes, Butler walked out. Hitchcock's been in for a year and a couple months, and but he's been on the board since 2021. So it's not like he's brand spanking new. So I imagine he is familiar with the whole process. So
He has a
it's not
lot of
like he's coming straight
experience.
in.
Yeah, honestly, he's like pretty close to retirement age, so he's probably like this is probably his last company, I would guess. Last CEO. He's pretty been in biotech for a long time. He's got some good track record, I guess you'd call it. They also have a pretty decent like their CMO. I forget the guy's name, like a sort of Spanish sounding name. But that guy's been involved with a lot of diabetes trials, and he's involved with them. And then they have their other main medical consultant, which is at Harvard right now, an Indian guy at Harvard. So, or again with an Indian sounding name that looks Indian, I guess to be precise. Um, and they have a bunch of different diabetes doctors there that they are collaborating with and working with, and like I don't know if officially on their board, but they're sort of consulting with from all over the world, and they're all pretty decent rankings. So it's kind of like with Galt. I don't know if you remember we were talking about Galt, how they had the former one of the four people on the with the president's not council cabinet Ben what's his name, that was on their board of directors. So that was kind of like a pretty good stamp of approval with Galt. This one is similar to that they have a pretty decent powerhouse of advisory boards, and this their temporary CEO is well qualified and all that sort of stuff. So I feel like the market is going to price this in at some point, price this with a pretty decent, a much more a decent because the biotechs are hard to value and it's just so many of them and sort of thing. I feel like the market's sort of not missing, kind of like with Aura, where it was trading in the 4 to 5 range, and it should have been closer to 10, I would say. Now that it's in the 8, 9 range, now it's not really, something I'm gonna go near. It's not enough of a discount for me. But if I feel like this, once it goes to the 5 to 10 range, then I'm like, great, I'm happy, unless there's some new data that's going to show me that's, then at least I've made my money on that mispricing of the market. So
Sure. So you have confidence in the CEO. I would normally have, you have confidence in the CEO.
yes, yeah,
Yeah,
yeah.
I
And the
do too.
founders, I mean, even the CEO still owns a pretty significant percentage, like 5 to 10%, depending on
Yeah,
how
so it says, yeah, insider ownership, again, just looking at it quickly, is about 6 to 10%, 6 to 10% ish. It's spread amongst. It's a little light. It's a little light. I know you're big time into insider ownership, but what it does have is a lot of institutional ownership.
it's a
Institutional
decent
ownership.
amount. Yeah, a
Excuse
decent
me.
amount. And then I've dug into the funds just like you did with your Rain, I believe, was the one that
Mhm.
you were talking about, the institutional ownership and all that, which was pretty impressive. So yeah, I mean, the main thing that I feel like they could improve on, and maybe that's why it's so cheaper now, is they really could improve their like, marketing, for lack of a better word. Like they're not really just walk up to like 100 people and say diabetes, what do you think about it, diabetes medication, and not one person's going to talk about this that study. Like they're kind of nowhere on the map, and I feel like that's their main issue, is that no one, they're going to go with the American Diabetes Association in, I think, late May, early June. I'm trying to think of the exact date, but that's American Diabetes Association sort of presentation thing, so that's going to sort of help, you know bring them to the spotlight a little bit. I know that with Summit, when I was with them when they were early and no analyst was following and all that, they really had to, the share volume was low and like the price was low and everything. And now that they have about 12 analysts following now, it's been a few years. They have a lot of institutional money. The stock has come a long way since then. The traders are all trading in. It's a pretty decent volume on that stock now, but for a while it was pretty crickets.
Cool, man. Um, so I just have it right here, so I'm going to speak for you. Is that the institutional ownership? I think is very impressive, especially for a $1.50 stock or $1.60
Yeah,
stock.
yeah. I mean, you can look at you can quote the micro cap market cap, but I think it's 30 to 40 million.
Yeah, yeah, it's only about 40 million. So I mean, to have, and not only that, we're talking about This is why I bought a little bit, even without doing all the homework.
Because you're like,
Well,
huh.
seriously, when 40% is owned by Fidelity and Vanguard, right? I mean, these are not small little fly by nights. These are really huge companies. You know what I mean? They're obviously seeing something, and again, I don't normally do all the deep dive like you do because I'm not throwing in my entire position in it. But
You're not putting
normally,
all your net worth in one
no,
position.
no, no, no. We had another video about that, folks. But no, no. I'm not saying yours is wrong. By the way, I'm just saying just the way I do things is that when I see an institution again putting millions upon millions and millions of dollars and accumulating more, I mean, they're obviously seeing something, that they see. Now, are they right all the time? Absolutely not.
No, of course
Absolutely not.
not.
No,
Yeah.
absolutely not. But lots of the times their track record is pretty good. Now, again, another one of my favorite questions. You know I'm going to ask next, right?
Cash.
Yes, cash burn. How's their cash burn? How much cash do they have?
9 months, supposedly.
Okay, so that's pretty good. Do they have enough for
They'll
the
have to
next?
raise, but realize they're waiting, just like a typical biotech. They're waiting for good news. They're sort of like rolling the dice is probably a bad analogy, but they're waiting to post good results, have people pump their stock up so that they don't get so diluted when they do their next offering.
Mhm.
All right, they could be a partnership, it could be a buyout, but offering is sort of the default go-to for a public biotech company. I mean, Rain just did an offering just last week.
Interesting. Now, I just did a search here because I don't know this question. Maybe you. Oh, maybe you know it off the bat. Oh, I already. No, I might as well answer for it. The last 6 months has been zero insider selling for them. Nothing.
Oh yeah. That for a biotech is really pretty much a deal breaker for me. I would say 99% of the time it's a deal breaker. I don't want to be funding their lifestyle with a biotech. I'm not really, that's not, unless they're cash flowing, I'm not going to be, supportive of anyone selling shares.
Now it does say a little bit of this. I didn't know this. This is just again, real quick. It says it has a very high short interest with this stock.
Exactly. Yeah. And I was actually looking into that, into the
You
history
looked at okay,
last
go ahead,
year.
talk about that. Yeah.
Totally. Yeah. No, I was looking into that. And the good thing about it is so the shorts, they they aren't always right, obviously, just like anyone else in the market. Although they do tend to be like, you want to listen to the shorts, let's put it that way. You definitely want to um make sure you're not wrong. Now with the shorts, what I think they're not doing their due diligence here. They're doing, as far as I can see, is they're saying, well, wait, why this company is so amazing? Why is it so cheap? And I think that's kind of the argument. Funding raise. So yeah, I'm sort of betting that the shorts are wrong, and that is only going to, if any good catalyst comes out, make the price even more market. Like maybe fair market is $7, but because of that short interest and the shorts covering, that might go up to $10. So to me, that just means I have more potential for making more money. But you're right, it is a valid risk because statistically speaking, if you have a high short interest on a stock, especially like a $1 stock, if you're shorting, like for example, I shorted 2 weeks ago, I shorted CAR, the ticker CAR, Avis Rental Group, I think is the full name of the company. That stock was at close to $1,000, and it had been trading in the $100 range for a long time, and shot up to $1,000. I shorted it, and again, it's a nominal position, and then covered as it went down to 200 shortly after. That's something that's way more like likely to go down, some super high flyer. If you're shorting something at $1, either you don't know what the hell you're doing, or you're very sure it's going to go into sub a dollar.
Mhm.
So, I mean, the shorts also make more money. So when you buy a stock that's $1 and it goes up to $3, you double your count, your position, whatever you want to call that. The shorts also similar. If they short at 150 and it goes down to $1, they make a good amount covering. If they put a decent position size on, you can't put that big of a position with short, but let's say they do a 10% position, they short at 150 and they cover at one. That's decent. That's a pretty profitable trade for them. So I
Yeah.
don't know
What
what for biotech. I don't know that biotech shorting really would ever go above 10%. So it's just so much risk there blowing per account.
Yeah, yeah. I mean, we'll see. The thing is with the shorts is that it does look like it's got a little bit of a higher short interest. So I
And it's
don't know
increasing too. It's increasing too.
what's that?
It's been increasing over the
Yeah,
last
see
week. If
that
you pull up the
that
chart.
is I would say that is a big time, not big time, but it's a cause for concern. It's a
Totally.
cause
I
for
mean,
concern.
like, so now this is a valid risk. So, like, I want to give you an example. So, I'm comfortable assuming other people are wrong in the market. And obviously, I'm not always correct. But if I see enough information and I see the market's wrong, I assume the market is wrong. Meaning, like, if I see a company's doing worse and worse, but the stock price keeps going up and up, I'm comfortable shorting that, looking at the, verifying the data, double check my thesis. I think, well, those guys are wrong. And you can see it a million times that there's people that are betting the wrong way on stuff. Like, for example, people buying car, that stock I shorted, they thought, you look at the comments, it's going to the moon, it's going to, a gazillion dollars, whatever. They're all wrong. It went down, it crashed down next week, and it's now in the 100 plus range. Those guys are all wrong, and they were driving, not maybe not all of them. Maybe there's other moves behind that, but that's manipulation. It's retail, dumb money, that kind of thing. So I'm totally comfortable. But you're right. That is it valid statistically. If you look at it, high short interest means it's less likely to go up, and that is a completely
Correct. Correct.
valid risk. I'm very comfortable with that. When I bought Summit crashed down, had a terrible day. I bought it could continue going down, and I was very comfortable because the data that came out was the Chinese FDA approved it. I have no issue assuming the market is completely wrong, and then the stock 3 days later was up to triple up. It was just manipulation. It tripled up from 2 to actually more than triple 3 to 11 within a couple days. So I was rewarded in that scenario. I'm not always rewarded, obviously, but yeah, I really I'm not assuming the shorts are smarter than me. I'm assuming they haven't done their due diligence because usually they haven't.
Right. Yeah.
But it is a valid risk. I'm giving it a 50-50. I'm not
Yeah.
saying,
Yeah.
bet your life savings on this stock.
Well, no, and the thing is, and that's where I was going to go at next, is that the catalyst event for the what is it, the obesity data drop
hmm
is next month. Am I right or wrong on that?
Yes, you're correct. And
Okay.
I don't know that that's a big um it's a potential upside for the stock, but like the main moneymaker, the main value, um, according to my research and what I've looked into is the diabetes. The obesity thing is like it's hot, it's trendy, it's whatever. It's sure it's nice because you lose muscle mass with the GLP-1s. This one, according to their very small studies, you don't lose muscle mass. You just so it's sort of a new and improved, Ozempic or Wegovy, or whatever. There's various um weight loss medications are actually my aunt's on it. So is they're obviously very popular. A lot of people are on it, and there's some risk to that. And this seems to be an improved option. That, but again, very few studies, very limited time. Like I think I think the market's priced in zero chance of maybe 1% chance of some sort of like good data or revenue from this thing.
Mm, okay. Um, so the phase two, right? That's Q4 2026.
That's the diabetes phase 2 you're referring to?
Correct.
Year follow-up. Yeah, that's the real mover. I mean, obviously they have trials and other sort of news events happen or presentations, conferences, stuff like that, undoubtedly this year. But yeah, it's that's going to be I think a real decision point for the stock that the company is assuming that they're going to have some good news and the stock's going to start moving up in a different range at that point, and then they're going to do an offering. So that's my base case would be either they do more promotions, more excitement, the GLP-1 data comes out good, or this end of the year diabetes thing looks good. One of those three things or a combination of those three things, and the stock price starts to move up, and then they do their offering at a higher price, less dilution, and that's kind of my base case.
Certainly, certainly. And just I guess what you're looking at through the data again isn't so much the weight loss, it's that there's less side effects. True? False?
Yes. Yeah, yeah. The weight loss is, I don't think it's from the data that they have and the data I've looked into the ones on the market, it's sort of like apples to apples, meaning like you lose, like over 3 months, you lose, 10% of your body mass or 50% or whatever. It should just be like you're not losing muscle mass is their claim to fame, their new and improved, their selling point.
Cool, cool. Let me think. Oh, yeah, yeah, yeah. Okay. So we're at like $1.50. What is your price target? What do you get in?
Yes.
What do you get out? I'm sorry. I can't believe that's like one of the most important questions.
The most important thing. Fast
Yeah,
forward
yeah,
to
yeah,
that
yeah.
part.
Yes, yeah, sorry. I think I'm on my game today, though. I think I am with my
No, no,
questions.
no, you're not bad. Yeah, yeah. Yeah, so good point. Price target. For me, I think so it depends on how so if you do a discount cash flow analysis of this and you assume, 10% of the US market takes this treatment, it lasts for either for life or for 5 years and they get a refresher or however you want to price it out. The stock is like in the high 40, like 40 range roughly for 10% of the US market.
Woo, $40?
Yes.
Okay, can you give a time range for to clinical trials run out, or we're talking about
I mean, this
what?
is like 2030 sort of timeline.
Yeah,
This is
right, right.
the
Okay, no,
road.
I'm talking. Okay, yeah. Okay, let
I
me
mean, do
go
you
for
want to
it.
hold a stock for a stock,
I
a
don't
roller
know that
coaster stock?
it all depends on. Well, first of all, you're depending a lot on how the trials end up. I mean, there's a lot of what ifs, and you want to read the data, each step along the way, obviously, and then reevaluate it. A, B, there may also be other stocks that may go up more than it. You know what I mean?
Yeah, it
So
may just be dead money for a year while everyone's waiting for the face, or like kind of like with Summit, like
yeah, yeah,
for a
exactly. And that's why I'm
while.
answering this question is that okay? Let's say somebody said, okay, I love it. I love everything about it. I'm buying it
I want to
about
buy it. Yeah,
yeah, buying it today, right? The catalyst event is next month. You know what I mean? But the big catalyst event is at the end of the year, obviously. But like, what's your price target between like now at $1.50?
yeah, like
Okay,
how
yeah,
to trade it
better question.
basically. Yeah, yeah, not full value like 2029
No, 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 no,
or
no, no. I'm
whatever.
saying
I'm not looking at that. I'm looking at okay, if the market gives us 25% of probability of success, now we're looking in the, $7 to $12 range. If you get a short squeeze because the short interest is so high, you might get lucky and get to the 15s, you get a 10 bagger. And that would be a this year sort of thing. But I would sort of think
this
if
year,
I was
6 months.
yeah, well, yeah, 6 months.
Okay, okay. Fair. Just wanted to not calendar year, but this year, 6 months.
This
Six
year,
months from now.
meaning 7 months, December, yes,
Fair enough. Okay. Yep.
roughly 6 months. Yeah, so that's what I foresee. And there's obviously some downside, meaning like you can go from 150 down to 50 cents or whatever. Um, well, yeah, of course you could lose your money, obviously, but there's quite a bit of upside and is a decent probability. And mostly what excites me is the fact that the market is pricing in something that I think is incorrect. The market is price. If the market was if the shares were trading around $8, then I wouldn't be so interested because I'm like, kind of like Summit. Like if Summit's in the 20 range, like I'm like, yeah, it's good, but like there's still some risk there, and I don't really see a great discount. When Summit goes down, like I bought a pretty decent position when it went down to 16 because that's a pretty good like the market's giving you for a pretty decent sale. So I put a big position in when I went down to 16 a couple days ago. So
Okay. So it's $1.50 now. You can see it going up to $6 or $7 by December, correct? Is that
yeah, yeah, in the $15 range on a short spike that you can potentially get out on. Because I trade these positions. I don't hold them. I trade them as I try to improve my return.
perfect? Perfect, man. Man, I think today's podcast has been really good. I mean, I've been feeling really good. Last one I didn't think
Yeah,
was
and oh, we didn't even mention, but I got my camera a little better here.
yes, yes, and
I'm
I'm
sure.
fixing. We're
Yeah, we need to
working on
work on
getting
Chris's
my
camera for next episode.
yeah. We're getting on getting my camera better. But for us right now, we want to make sure to get the information out as much as we possibly can. We fool around with the camera a little bit to try to get better quality, better sound, make the experience for you guys better. But again, I know at least one person. I'll shout him out, Scott. He just listens to he all he does is he doesn't even watch. He just listens to it.
Downloads
But
the MP3
yeah,
or
you
whatever.
remember Scott. You remember Scott.
Yeah, I
He
remember
listens every yeah
Scott.
he listens every podcast.
Wow,
So
nice.
hello, Scott. I
He's
guess.
got.
But Okay, so we have about 9 minutes left. I do want to talk a little bit about a teaser and for next week, but more importantly about market news because markets have shifted since the war. And what do I mean by market? I mean specifically with the Fed and interest rates. I guess I'll take over the reign a little bit here, but
Sure.
so essentially what's happened, folks, is because of what's happening with the world, with oil going up and cost obviously above the 2% mandate for what the Fed wants. Basically, the
The
Federal
interest,
Reserve
yeah.
has two mandates. It wants to maximum employment possible. You can never really get maximum, and also to keep inflation at about 2%. Now, ever since basically COVID, it's been anywhere from like 10% under the last administration to now it's in the three handle
The
percent.
official number. I think it's a little higher than that, but yeah.
Let's deal with their numbers. You know what I mean? Because I agree with you. Like the numbers are fudged. But but anyway, with that being said, they haven't been able to do that. So although our president does want rates to be cut, with now all the instability in the Middle East and with oil now, I think trading at like 100, 101, 100 to 103 a barrel esque, it's causing issues. It's causing issues with keeping inflation down and keeping costs down. So basically the betting formats like Kalshi and Polymarket, et cetera. Before, when we talked in earlier videos, we may have mentioned, hey, look, there's going to be a Fed change. I think federal Powell's out and Warsh is in, so that slight catalyst event. But the more important catalyst event is Warsh is obviously a Donald Trump guy, and he
Trump
made a
obviously
press
wants lower interest rates.
obviously like all presidents mostly want lower interest rates. Now
Yes.
we're going to see here. I mean, is it going to happen? Is it not? We normally, Dylan and I normally go off of, we don't go off our own opinions. We normally go off of betting markets because those people actually put their money where their mouth is. So now it's worth us mentioning over the last 2, 3 months, the betting markets originally, when we probably started this forecast, had cuts almost guaranteed 80,
I think it
90%,
was like, yeah.
right?
Two cuts possible, one cut like 90+%, I
Yep.
believe.
Mm-hmm. And now we're going down to like in the 30, 40% range for a potential cut. And by the end of the year, they're even actually factoring like a 20% potential increase, right? So look, is this going to really matter for people's money like on an everyday basis for right now? No. But I did think it was worth mentioning in the podcast that a catalyst event, which could send the market up, has already kind of been now in jeopardy. I don't know if you want to comment on that. I don't know if I said that properly, but
Yeah, I mean, earlier when we were talking, I guess we weren't interviewing or interviewing when we weren't recording these podcasts earlier when the Trump administration first came, we saw a lot of good catalyst events when we talked weekly. We did this sort of informally. We saw a lot of really good catalyst events coming up. The Doge, the efficiency, the a lot of good things. Tariffs were also potentially good for American
the
companies.
tax. Remember the tax?
Tax, I'm sorry. Yeah, thank you for jogging my memory. Yeah, just a lot of good catalyst events. Those are kind of running out now. This
Mhm.
war was obviously not something that he mentioned or predicted or telegraphed in any way. It's not really good for the market, really.
I think we can agree on that. But stop right there. I'm sorry. I like to interrupt you just because it is worth kind of saying. I don't think this war is good for the economy, good for the market. You will have people who argue that. What do you think? Go ahead. Sorry, Dylan.
Yeah, I mean, of course, there is a certain way we're saying, well, like these defense industry things, Germany's going to buy a bunch of missiles and bombs, and that's going to help our people. And this is a war where other people are killing each other, and it doesn't really affect us negatively, and we can still. There's a legitimate argument for that, but if you look at fundamentally, war is basically destruction of net worth. So maybe one small group is going to get richer, but like let's just say you're counting the whole world as 10 guys in a room and they own their room and their whatever, and you go around and you smash half of them, the whole world just got poorer. Like, you don't have as much, your land's not as valuable because it's all blown up. So it's really fundamentally a value destruction war is. Yeah, there's no real way around it. The people who are employed killing don't aren't doctors helping or researchers. They're doing things that are fundamentally not really productive, so to speak, in terms of network generation and wealth and things that the market cares about and is focused about. So that's the angle I'm coming from. There can be a sort of a defense industry, or US is going to end up on top for whatever. There's that whole argument because you are referring to the US stock market, not Iranian stock market or whatever. So there's that argument that has a valid sort of thesis. So, but yeah, I mean, fundamentally, I think the uncertainty of war, potential World War III, I think that's not really a good thing for the market. So I don't think it's really helping the market. And I think the sooner it gets resolved, the better. So that's, I guess, that sort of a catalyst, meaning the war could simmer down or chill out or whatever, end or however it's going to occur to make the market no longer be concerned about that region and the shipping and all that sort of stuff. And I think it's pretty best case scenario that, Iran doesn't charge any tolls and everyone's peaceful and the ships are going. And that's what I'd like. And I'd like to get, to that somehow, but I'm not involved in disputes or with the administration or anything like that.
Yeah, and I think it's really important that although we always talk about catalyst events, stuff comes up. We had not had this priced in at all. You know what I mean for this for a podcast or anything like that.
Yes.
But when it happens, you know what I mean. Like I mentioned, missiles fly, time to buy.
Yes.
Literally 2 days before, had you bought at 6,500, oh no, that was 65,
Oh,
66
was
and a
it
half or something like that.
66? Yeah.
Yeah, and now we're at 70, almost 74. Think
It's a
about it.
crazy return. Buying the
These are,
S&P 500.
and that's just the S&P. You could have bought Micron, which is almost doubled or whatever. I'm doing safe investment, like much safe. You could have bought
You're
almost
not doing it all in a biotech like me.
no, 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 or into even or like Nvidia. Well, I remember the talk about Nvidia. That was something I did buy, and I again one of these days I go through my
It's
portfolio.
been doing great. Yeah, you got, I think, under 100.
175 now. It's
Oh,
two
very
twenty
low
five.
100 on 108.
Yeah, well, that was a year ago. I'm not even talking about I rebought again.
Oh, recently. Okay.
Yeah, recently during that missiles fly time to buy at 175. Now it's at 224.
Yeah, that alone was a great buy. Like, not counting your steal of like
Yeah,
the
steal
pair of tantrum days.
yeah. So anyway, no, I'm not here to toot my own horn, but I'm just here to say that we did not predict that. I mean, like we did not, but you had to be able to act during at the time. And this is why we made the podcast to say, hey, folks, we're doing this. We're putting our
We're making money on this, basically.
we're making money on it. You know what I mean? Like we're sharing it because every one of my family members say, you know, so much about finances. I just said, you know what? I'm just going to make a podcast and point you out to what podcast, you know what I mean? And then go with it with my buddy Dylan. So we can have some fun with it. So that's all I wanted to say. I mean, it's not a big deal, but it is a deal that we had something struck in. And actually, Dylan, you did bring up another thing is that I guess let's go with this. We got 5 minutes. What are the upcoming
1 minute.
catalysts of 1 minute? Ah, shoot. Well, on the next thing, I don't see, okay, let me just say this. I don't see many catalyst events coming up
Me too.
specifically. If we do come up with something on the next episode, we can. But right now, you've kind of burned through the midnight oil. I mean, do you have any opinion on that?
Yeah. Yeah, no, I agree.
Yeah, okay. So for next week, we are going to do a stock that is a Brazilian oil company. I'll give you the ticker, I'll give you everything.